A major sell-off rocking Wall Street. The Dow got dumped, tech got wrecked, Bitcoin got bludgeoned, and precious metals, they melted. So where are we headed from here? Each of our traders has the one chart they are watching for a clue. So let's go around the horn. Tim, kick us off.
I think it's Apple. Look, if you define the market by the S&P or the Nasdaq, you know the weightings. It's 6% almost S&P, north of 10% for the Nasdaq 100. And today, Apple closed at or just below the 200-day moving average, which it hasn't closed below since really May of 2019, to the downside, unless if you can remove, and I think you can for this discussion, the downdraft from COVID, which was a down spike for obvious reasons. Again, this is a company that just 3 weeks ago, a month ago, gave you some of the best numbers they have ever put out. It's a company that's got $205 billion of cash on the balance sheet. They're in a 5G super cycle, 26% services growth. We know the story. I don't need to get into it. But this stock, not since May of 2019, also sell in May month, had you had this kind of a down move in a stock. That was 65% ago in the stock, by the way. So that concerns me. It concerns me because I think it's also the psyche of the market, and a lot of retail investors is tied up into Apple.
Steve Grasso, what is your chart and why?
Oh, it's got to be, we just spent 30 minutes talking about inflation and talking about yields. It's got to be the 10-year yield going back to 1981. We haven't been in an upcycle for rates since 1981. If you look at the chart, you don't even have to be a technician. It's been a series of dramatically lower highs and lower lows. And I don't think that we have to worry about inflation running out of control. And I think this is what the chairman looks at. This is what Chair Powell looks at. He's not worried about it, and we're not worried about it. So I don't think the market should be worried about it. Obviously, if you're an overvalued tech stock, or if you're something where you have no earnings, then you have to be worried. But if you're restarting the economy, put your money in value. Don't worry about inflation spiking out of control, because we haven't seen it for the last 40 years.
All right. Karen, what's your chart?
So my chart is actually somewhat similar along the same vein as Steve's chart. My chart is the 5-year. And this, thanks to Andy Constant for this chart. The 5-year is what is the expectation 5 years from now about 5-year inflation forward? So in 2026, what are people expecting 2031 inflation to be? And clearly it's higher than where it was from the chart. You can see where we were in the pandemic. But it's not crazy runaway high. And the Fed has told us, and I think Steve Leisman was getting to this, this is something that they really look at because it sort of ignores the noise of the short term and it looks further out. Where are inflation expectations going to be further out? So similar to Steve, I think we'll see inflation. I don't think it's going to go crazy. And if you're a super high flyer, that's problematic. But some inflation, I think, is okay or even good.
Just looking at this chart more carefully, Karen, tell me if I'm reading this correctly. It implies that 5-year forward expectations of inflation are at the highest level that they've been in the time span of that chart. That seems like that would not be necessarily a good thing.
Right, but think about this is with the economy restarting, right? And I know they're trying to ignore some of the short term, but we've seen this in the past, and the Fed hasn't tightened in those except in 2018 when they did around here, and they ended up saying that was a mistake, we shouldn't have done it. So if you think this chart shows the Fed should tighten, I don't agree with that.
Got it. Okay. Guy, what's your chart?
Well, I'm going to buy something on the line for the first time soon, and I'm sure I'm going to do it on the Amazon. And it's interesting, 2 quarters ago, Steve said you fade the move to the upside. He was spot on, but this last quarter was a remarkable quarter by any metric you look at for Amazon. And I was pretty convinced we'd take out that September 2nd high of 35.50. Well, as Carter Worth says, to the penny, we traded up there and failed. You have a massive double top in Amazon. It has not traded well at all since earnings. That 29.50 or so level from, I think, March 8th is in the crosshairs. To me, Tim brought up Apple. I think Amazon is in that same vein. You lose Apple, or you lose Amazon, you can start losing the broader market. So to me, I look at Amazon and say this right now is the most important chart in the market.
Are you really buying something on the line? I mean, you waited all throughout the pandemic till after you're vaccinated,
Probably
and then you're going to buy something online?
I wanted to get Bezos excited that he had a new customer, but no, I'm not.
All right, the truth comes out.
Shepard Smith here. Thanks for watching CNBC on YouTube.